Palantir just posted one of their best earnings, revenue beat, growth exploding, and guidance raised. So everyone's asking the same thing. Why did the stock tank? Here's the real reason in a few parts. Expectations were insane on Palantir. It had a massive run up before earnings and the valuation was already pricing in perfection. So even though the numbers were great, the market wanted something even better. When a stock trades at a premium, good isn't good enough. Anything short of a blowout gets sold. A lot of traders were also buying the hype into earnings and locking in profits immediately after earnings. It didn't matter how strong it was when the stock ran so high. The whole AI sector was also pulling back at the same time, like Meta and Nvidia, as well as management talking about sustainability, government contract dependence, and AI spending not always producing value. So even though growth is strong now, investors were worrying that this pace couldn't continue. Basically, amazing quarter today, but questions about future quarters. So in short, there were huge expectations, profit taking, and long-term uncertainty. And that combination can drop a stock even after an incredible earning report. And that's exactly what happened to Palantir, PLTR. And on top of all that, the PEG ratio was a big wake-up call for investors. Before earnings, PLTR's growth was so strong that it actually justified the high valuation. The peg was low because earnings growth was outpacing the stock price. And that's why a lot of people were comfortable buying it even with a high PE. But after the earnings call, the future guidance showed that growth is still amazing, but not accelerating at the same pace as the expected growth. And when future growth slows even a little bit, the PEG ratio shoots far higher, and then the stock starts to become expensive relative to the growth that is coming next year. So even though it had an amazing quarter, the market realized that the valuation didn't make as much sense anymore because of the PEG ratio raising. And that is a huge reason why Palantir sold off so sharply. In all honesty, it mostly has to do with the PEG ratio and the fact that future growth was not going to be sustaining this price. So even though Palantir is a good stock, a good company, the premium you're now paying for such a great company is not justified based on the growth that it expects to see. And those things all combined into this short time frame is what caused Palantir to drop so harshly. Including that, there was tons of short reports. There was like Michael Burry, who not a huge fan of over here, is just very pessimistic and wrong. Feels like 8 times out of 10. But anyways, lots of news was covering all of this and scaring typical retail investors. And then once that was happening, people were closing out, being shaken out, and now it may slowly come back to a decent PE and decent PEG ratio relative to the growth and expected growth, to where you can actually buy in at a decent price and feel secure. So even despite the good earnings, that is why Palantir dropped. Sometimes things can be a bit more confusing when you actually look in depth, and eventually start to make sense when you're understanding what all of this stuff means and how such good earnings can actually cause a stock to fall. So thank you guys for watching. See you next time on Mitchell Markets. I still have a lot of updates to do, as lots of stuff has been happening over the last couple weeks. So we're going to be getting into some of my current positions, as well as some more plans and plays